Have become more able to pay their debt in the second quarter of this year than April, May and June. The Consumer Credit Index, or CCI, has increased slightly to 47.1 in quarter two from 46.5 in quarter one. This is according to credit information company TransUnion. The increase is a good sign, really, that people are able to service their debt. The index is made up of three components. That's consumer credit behaviour, borrowing and then repayment, household cash flow conditions and debt servicing costs. So to unpack what this all means for people with credit is Geoff Miller. He's the regional president for TransUnion. Good to see you, Geoff. Welcome to the program.
Thanks, Liam.
All right, so essentially, are people becoming better at servicing their debts? Is that what we can read into this?
The index is up slightly. I think it's maybe a little bit confusing because last quarter we had the 75 basis point increase that happened in Q1 that really dragged down the index quite substantially. So we would view this more as a lateral move, and what I would actually look at is where were we in Q2 of 2015? Yeah. We were at 55, and now we're at 47.
Okay.
So it is a slight increase, but I think what the index is saying is it's still below 50, and it means that consumers are really struggling to pay their debt and really reflecting the economic conditions we're seeing today.
So obviously, I mean, we have to mention the fact that that the Reserve Bank did hike interest rates by 0.75%, and the CCI fell sharply.
Yes.
So talk to us between the relationship then.
Yeah, so we look at three factors, I think, as you referenced earlier. So we look at what is the cost of servicing debt, and so obviously interest rates play highly into that. Then we look at how many consumers or the number of accounts that are going delinquent. We also look at distressed borrowing, which is how often are consumers using revolving credit or credit cards to service their day-to-day living, and we actually saw that increase by 2% this quarter, so that was a bit alarming to us. And then the last is around household cash flow and inflation, and that's been muted for quite some time now.
Yeah, I mean, when we look at healthier credit behaviour, the link between inflation and, of course, uncertainty when it comes to the currency, are they related in a way?
Absolutely, because as consumers' day-to-day living expenses go up, their ability to take on more credit becomes more limited, and the credit they've already taken on now becomes less affordable. So when you have high inflation, suddenly that loan or that personal loan you took out 6 months ago that seemed you could make payments, now all of a sudden is coming under threat because you're paying more on fuel, you're paying more on food, etc.
Yeah, which is a repercussion, and now we're seeing, we're hoping it doesn't go back to the levels that we were witnessing, but now yesterday the currency taken a bit of a hammering.
It has, up on some of the announcements that we've seen today. And I think, the currency is going to continue to be dependent upon what's happening locally, but just as important is what's happening in the US and in other markets.
Yeah, and which affects us all directly, as you heard. Explain to us how the CCI measurement works, because the credit score is still uneven. 50 is actually the break-even point.
Correct. Yeah, so anything below 50, so we're at 47, anything below 50 means credit health is declining.
Yeah.
Anything above 50 means it's improving.
Okay.
And if you look at the trend, we've been on a downward trend for the last couple of quarters, last quarter specifically very sharply, and I think that's reflective of low growth. We lost 500,000 jobs in the first half of 2016, inflation and all those other factors. So what we're seeing here is not a surprise. What we're hoping is it doesn't get much worse.
Yeah. Look, just as a wrap up, revolving credit is still is an issue, and that we're talking about credit card payments.
Yes.
Are people still sort of reluctant to pay that off?
So we're seeing payments hold up all right, but what we are seeing is they're using more debt. So a revolving card, you actually have an open line of credit and you can use it up to your credit limit. That measurement in terms of the use of that credit limit has been increasing for the last 12 months now. So our theory is that consumers are using credit cards to manage day-to-day finances, which is always a worrying thing.
Yeah, very worrying, because they just grow and grow and grow, and before you know it, you're drowning.
Exactly.
Geoff, thanks for talking to us. I know we have
Thanks
Geoff in every quarter, so we'll have a look and see how things are going in the next quarter. But this is just talking about the money. Geoff Miller, Regional President of TransUnion Africa, repaying your debt. That's the topic of this particular conversation. Let's take a break. Valen will be in with some sports news after this. Stay tuned.